Hi, welcome to Duke Warner Corner. My name is Fred Johnson, and thank you for joining us today. Today I wanted to talk a little bit about mortgage rates. So just because it goes up a quarter percentage point doesn't mean that it's going to go up a quarter percentage point. Today we're seeing that the rates are a little bit under 4%. At under 4%, that means that the mortgage rates on a home of $300,000 is right about $1,500. And by moving that up a quarter point, that raises the interest by $50 a month. Well, the $50 a month really doesn't sound like that much. But let me carry that out just a little bit for you so that you can really understand what a quarter percentage point makes and why it might be in your best interest to get out and get pre-qualified and consider getting in the real estate market sooner better than later. So if the quarter percentage point raises your bill by $50 a month, basically what that means is that in qualification and income to debt ratios, that means that your payment cannot exceed about 30% of your income, which means that that $50 payment turns into $150 a month of additional income, or $1,800 for the entire year. So for many of you that may be on salary or hourly wage, the prospect of being able to purchase a home of the same exact value and maintain the same payment would mean that you would need to have an $1,800 or $2,000 a year raise for that year just to absorb the impact of a quarter percentage point of interest. Or another way to look at it would be on the other end and how it affects your buying power. If your income remains the same and the interest rates move up by that same percentage point, that would mean that basically there's a rule of thumb within the lending industry which basically says for every 1 percentage point of interest, it reduces your buying power by about 10%. So what that means is if you're looking at a home that's $300,000 and 10% of $300,000 is $30,000, that would mean that to buy and maintain the same payment means that you would now be shopping in the price point of $270,000 and not $300,000. And for those people that are a little closer to entry price point, a $200,000 home would then move to a $180,000 home. And the unfortunate thing with this is that the values on the properties don't move as rapidly as the interest rates are driven by the Fed. So if you've been considering getting out and purchasing a home, this may be a very good time to take advantage of the historic low interest rates. You know, throughout history, we've averaged a little over 5 to 5.25 has been the average interest rate. Now with our interest rates being under 4, maybe soon going to 4, those are still historically low rates, and it's certainly a good time to get in and consider getting pre-qualified for your mortgage. So really, to wrap things up, as much as it makes a lot of news on the television and in the newspaper that interest rates are going up at a great rate, it's a good time to get out and give it some consideration. If you're somebody that maybe lost a home through short sale or through bankruptcy and you had some credit blemishes and you were given a timeline of 2 or 3 years that you needed to work those blemishes out, or if you're just considering getting into the market and you'd like to buy a home, this may be a very good time because the scheduled increases are going to be over the next Fed meetings. They're talking about bumping the interest rate in a sequential pattern. So maybe at this time next year we could see that 1 percentage point would be a very real possibility. So to conclude, this is a very good time for you to consider consulting your mortgage broker. As I always say, try to surround yourself with people that are knowledgeable and experienced, and they'll help you represent yourself to the best of their ability. And if you get out today, maybe you are a couple of months away from being able to qualify for your mortgage, then that way you have everything in order and everything in line, so when the time does come that you want to buy a new home, you have the opportunity to contact your mortgage broker and secure a loan that works best for you. Thank you so much for tuning in to Duke Warner Corner today. My name is Fred Johnson. Please like us on Facebook or contact us anytime on our webpage below. Hello?